This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Beginning today's show is Daniel O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, as they provide a grain market report and the reactions to the recent WASDE Report. In the first segment, they discuss corn and grain sorghum. Daniel and Guy keep the show rolling as they chat about transport, currency, soybeans, and wheat in the second segment. K-State meteorologist Chip Redmond ends the show explaining the recent warm temperatures and what moisture and continued temperatures Kansans can be expecting. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update as well as initial reactions to the WASDE report we got on Tuesday, February 10th. And to talk about it, we're joined by K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
Wanting to talk through our different commodities. Daniel, what are we seeing domestically for corn?
You know, the one sizable bit of news for this WASDE report on the domestic side was the 100 million bushel increase in the prospective exports of corn in that corn supply demand balance sheet. So now we're up to 3.3 billion bushels projected for exports. The previous high was several years ago at 2.7. So again, we were at 3.2. Now we're up to 3.3, going higher. And of course, when you look at the impact on the balance sheet, with nothing else changing, in essence, you raised usage by 100 million bushels, took 100 million bushels off the ending stocks. Now we're down at 2.127 billion bushels of ending stocks projected as of August 31st, 2026. Stocks to use down from 13.6 and coming out of the January report, now down below 13 to 12.9% stocks to use. When you at least in trying to look at what the USDA made that decision on, you look at the latest numbers that we had out as we're talking about this. January 29th came out of the U.S. Foreign Ag Service. We had total shipments up to that date of about 1.3 billion bushels of corn, which is 40% of the way to the USDA's projection at that time of 3.2 billion. Now it's probably 37% of the way there. And then we had purchases, both outstanding sales and shipments of 2.3. Now, by the time we've come another week forward, that's 2.4 probably, or on the way to 2.4. So the USDA with that type of pace, being that we're about 23, 24, 25 weeks into the marketing year, about 44, 46, 47%, depending on which date we peg ourselves to. You end up with, again, if you're on the way to now 3.3, you need basically 1 billion bushels actually bought and shipped to make it there. And again, you're already 2.3, 2.4 on the way to billion bushels on the way to this now 3.3 goal. So, of course, the background on that has a lot to do with U.S. corn being shipped to Mexico, but also some other countries also very, very involved in that. Just one other overall opinion on the supply-demand balance sheets. When you stand back the last several years, it's no wonder that we have prices being subdued relative to previous years. Projected price of $4.10 here for the 25-26 marketing year, $4.24 last year. And we had about 1.6 billion bushels of stocks. 2 years ago, $4.55 at 1.8 billion bushels of stocks. I think the key issue is that, hey, we're still above 2 billion bushels of stocks. The market's not worried about where things are going. We will have here at the end of March another quarterly stocks report, some more a planting intentions report, and in between then a USDA Ag Outlook forum set of projections for 2026 upcoming marketing years, upcoming periods. So it's kind of a time period where really that things that move the market are more on the usage side and maybe expectations of what could happen elsewhere in the world, particularly Brazil and Argentina, et cetera. So with that, Guy, what are your opinions on these markets with regard to the international picture that came out?
Well, looking on the international side of corn, let's sort of start with the production changes. Among the major exporters, there were really no changes there. However, we did get some optimism from our export and import numbers. The Ukraine exports were scaled back 1 million metric tons to 22 million, and Mexico's imports were raised 500,000 tons. I think that's due to a bit of the dry weather, and it's good to see that good corn demand from the livestock sector down there. They're sitting at 26.3 million metric tons, and look, that'll continue to make Mexico one of our biggest trading partners this coming year on the grain side of things. China, no real change in the China numbers in production or imports. They're still sitting at 8 million metric tons. I sort of can't help but think that 8 million metric tons might be a little high. And that's sort of how I see the trade matrix. Not a lot of changes on that overall. Just looking at one footnote, wheat feeding, it was increased 500,000 tons to 162. That's 8.5 million tons above last year on the wheat feeding. That's for non-U.S. wheat feeding. And, we're sitting there looking at record corn exports coming out of the U.S., and I've sort of scratched my head a bit and so just think, how can both those numbers be true? So we'll sort of see. But as you said, Dan, that export pace coming out of the U.S. is we're right on track for these numbers and expect them to come in pretty strong and reach those targets. So that's a good indication.
Oh, and Guy, if I can add in also on corn, on major exporters for corn.
Yes.
You look at the last 3 years, so 23-24 marketing year, the major exporters, including Argentina, Brazil, Russia, South Africa is thrown in there, Ukraine, stocks to use of 26.2%. Then 24-25 marketing year ended, again, August 31st last year, got that down to 8.8%, and now projected for this year down to 6.1%. That's actually up from January a little bit. So the market isn't greatly worried, but yet the pace of exports and on the world market are such that for major exporters, we are tightening up as a group their stocks to use, and I don't know where that takes us if we have any weather problems in any of these, particularly in Brazil, and that could still happen for their second crop. Any comments on that?
Yeah, that's right. We're looking at corn stocks 2 million tons lower than last month, 289 million metric tons, 5.5 million tons less than last year. And if we look at the total coarse grain situation, we're 3.2 million tons below last year. So if we're going to get any joy on a higher commodity prices, again, I'm going to say corn's going to have to lead the way, even though, coming out of January, we saw some fairly bearish numbers there. But corn, I think, is going to be the leader on any of those situations. So we'll keep a close look.
And from this, we're going to talk about sorghum here in just a second. But before we leave corn, corn's such a primary commodity for us. I think we're at the situation now where, of course, it won't be long before weather concerns in the U.S. start to come into play. We'll be looking at what happens for the second crop down South America. But if we didn't have these strong exports that we have right now for the corn market, we'd be in a much worse situation than we are, particularly with ending stocks in the U.S. over 2 billion bushels. Overall, Guy, I think we just kind of weather where we're at right now until we get out into spring and see what weather brings us in the U.S. and what the tail end of Brazil is. Any thoughts on that in terms of
where we're going? The only thought is maybe people are taking a bit more notice of the flip in the food pyramid the USDA put out a month or two ago and eating more animal protein and meat. And look, that's a good thing. I sort of like that four-legged process or two-legged processor that walks around there.
And Shelby, I know we just got a couple minutes left. I want to mention for grain sorghum, really very small changes in the grain sorghum supply demand balance sheet, there was a small increase of 5 million bushels in the food seed industrial usage side. To me, that's probably an indicator of using ethanol in grain sorghum, but we'll wait for the details on the inside of that. The USDA has not changed its 225 million bushel export figure for this marketing year for sorghum. The pace that we've seen, although it's a little choppy, of China coming in, buying sorghum is positive. We do see in the country, in Kansas, we see grain sorghum piles moving. So that's not the most scientific explanation or indicator of where markets are going, but it is something pretty positive. And of course, that the world sorghum market's dominated on the buying side by China, so that China's coming into the U.S. is the bellwether issue. That plus it's kind of dry in parts of Australia. Guy, any comments on the world sorghum side?
Just look, since China was in 2 weeks ago and bought the 360,000 metric tons, we have seen FOB Texas Gulf basis numbers firm up to about 260 over. Haven't necessarily seen that reflected in the cash prices around Kansas. Half our sorghum is sitting here in Kansas, but if they're cleaning up those ground piles, maybe that's a good thing. Get some of those head stocks moving out of the way. And particularly, I think you want that sorghum picked up before it gets to spring with this warmer weather we've had in the forecast. So it seems to be working.
The only prices I've seen indicating movement are spikes that happen in central Kansas and in southeast at export elevators. So we do see some movement, but it's not uniform everywhere.
Yep.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Daniel O'Brien and Guy Allen as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our grain market conversation and initial reactions after the recent WASDE report with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Guy, while we're thinking about our grain market domestically and internationally, important for us to mention transport and currency, and how are those currently looking?
Well, start off with currency. We've had a bit of volatility in the dollar. I've been trading between 96 and 98 on the index. That's a bit weaker since the first of the year, and I think that's lending a bit of support to our strong export programs here at the moment. I think some people, when our currency gets weaker, it makes everybody else's dollar go a bit further, and I think we've seen some of those guys come to the table on that. Expect to see a little bit of volatility there. I think the weakness is in there down to when it dropped down just to 96, but we'll see how we go in the future. The dollars have been trading in a pretty steady range for the last 12 months. Moving over to transportation, middle of winter, and having grown up on the Illinois River system, I'm glad I got a desk job. The Illinois River's been iced over and locked up pretty good the last couple weeks. That's starting to flush out and let those barges move. We still have low water on the lower Mississippi from particularly Memphis south, but south of St. Louis is always a problem there as well. We have restricted draft and slower movement of barges. That's actually not only put a premium in barge freight, but we're seeing rail freight traded a bit of a premium to tariff values now as well. But that's lending a bit of support to Kansas and Western Corn Belt grain. It typically moves by rail there as well. So it's some interesting logistics happening there with L's whole transportation dynamics. Just on the ocean freight situation, we've seen a bit of volatility on that in the last couple weeks. We dropped down to about a 6-month load, about 1,600, but we're back up above 19 here at the moment this week. And as I think we're seeing some of that export business, not only for grain, but also for coal and iron ore, filter through that dry bulk index a bit.
And while we're looking at those macroeconomic conversations, what are we seeing when we look at soybeans? Is there any impact?
The broader situation with the soybean supply-demand balance sheet from January now to December was unchanged. Absolutely no changes in the balance sheet for soybeans, but also for soybean oil, soybean meal. Again, prices unchanged, stocks to use unchanged. Really, the predominant thing that issue that stands out to me is just that we've got ourselves to where we're in the mode where we haven't had a really extremely short crop. We've over the last 3 years, we've been ranging from 325 million up to now 350 million ending stocks. Not a lot of change. Stocks to use about 7.3, 7.4 last year, now up to 8.2% stocks to use, 8.3 2 years ago. So a steady situation with so-so prices. With that, I guess, Guy, that doesn't necessarily hurt us in the market a lot, but I guess domestically, I don't know how many years in a row you can count on having pretty decent crops, no upheaval, no problems. That would shake things up. I guess we can't stand prosperity in terms of level weather, and I wonder how many years this will continue. But that's why we're economists. They pay for us to worry, I guess. How about the international side, Guy?
Well, on the international side of things, one of these sort of proverbial non-event reports from an analyst's point of view. They did raise the Brazilian crop by 2 million metric tons. They're starting to get busy planting down there. They did get some rain. Looking at Argentina, it was left unchanged at 48.5 million metric tons, and they really needed some rain and got a little bit this week. China, can't talk about soybeans without talking about China. They left China pretty much unchanged with imports of about 112 million metric tons and 108 million metric tons of crush. That would be record for both of those for China. I'm always a bit surprised. I sort of expect China to level off, but they continue to crush quite a few soybeans there. So yeah, not really too much else to add on that. The U.S. export pace for soybeans has been surprisingly strong, although running behind. But the last couple of weeks, we've seen a bit of a kick in both inspections and sales there. I put a bit of that to the cheaper U.S. dollar helped there a bit, but it's going to be pretty hard to catch up to meet, I think, that USDA estimate for the end of the year. But we're sure putting a good effort at it.
Well, yes, and really the news in the market was based on a social media communication from the President Trump after he spoke with Chinese leader President Xi, and President Xi had talked about buying even more soybeans. I think 8 million metric tons more here in the not too distant future. So that's a rumor out there. And yeah, for the week ending January 29th, we had 51 million bushels actually shipped. If the marketing year were level all the way through with no changes, and we didn't have that large Brazilian supply coming on, we'd call that bullish. But as it is right now, we're waiting till the next few weeks, all that much more. You'll have Brazilian beans coming onto the export market, and we'll be challenged to maintain that current pace.
Yeah. If we don't have that export business done by March, April, it's just hard to make that up at the end of the year, and we're putting a good last minute effort in there. But when that clock runs out, it's going to be pretty tough.
Domestically, almost no changes at all. And again, with the wheat supply demand balance sheet, any movement in the markets, mainly either a worry about U.S. plantings or winter wheat plantings, or international story that there was about a 5 million bushel drop in food usage, and that's just because of the USDA reconciling some other domestic flour milling data that came available. Really no changes. Stocks to use for wheat in the U.S. at 46%. So, that's not a tight situation, and just puts us in this mode of just so prices relative to our cost of production. 490, latest number projected. The last 2 years as a price here in the U.S. Last year was 552 as an average, 696 2 years ago. So 490 is an okay, but just so situation profitability wise. Guy, how about you for the international wheat side?
Well, world production was lowered just 370,000 metric tons to 341. However, that is still a world record wheat production, even though it's slightly lower. USDA left exports for Russia, Ukraine, and Australia all unchanged. Not too many changes there. Argentina production, they did increase slightly up to 27.8. Canada, they left unchanged there as well. A key player in that is China, supply and demand basically unchanged. Dan, you've got those ending stocks to use numbers for the world for world less China. They're still pretty loose there. What do you have for that?
Just kind of bouncing around in a kind of a sideways mode here. 2 years ago, the 23-24 marketing year that, according to the February report released here on the 10th, 2 years ago is about 11.9% stocks to use from major exporters. Then last year we tightened up some down to 10.1%. Here now, early on in the calendar year, we're pretty optimistic on exporting country supplies, are back up to 13.2%, down actually a little bit from what it was in January. So we were at about 12, dropped down to about 10, now back up to 13. Again, not a lot of positive incentive at this time. I would say for domestic U.S. wheat exports, when you look at the overall figures, it's a little more positive. That we were with 36% of the way through the wheat market year, about 69% of that. We bought shipments and sales for all wheat of about 89%. We're 89% of the way to the USDA's 900 million bushel projection. So that's not terrible. And actual shipments were 67% of the way to the USDA's goal at 607 million bushels. Hard red winter wheat really having a pretty good year, even though prices out in these western areas aren't much, and maybe low prices help to cure low prices, I guess, with sales. But we have had, although it's an up and down deal a bit, we have had hard red winter wheat exports out of the U.S. Have some pretty good weeks of late. So we'll see how that ends up.
Well, one thing I noticed in the World Trade Matrix there, they left China production unchanged at 140 million metric tons. They still left their imports at 6 million. That's versus 4.17 last year. I can't help but think that China import number for wheat's maybe a bit optimistic. Thing is, they've got their domestic wheat feeding at 31 million metric tons. So maybe they have a bit more of a quality issue over there than what I think, and they'll be importing that difference basically to make it up for their milling situation there. So we'll just have to wait and see.
Having lots of internal discussions on political issues in China, but I don't think that hurts their desire to maintain adequate wheat stocks or food stocks. If anything, they probably buy more. So we'll see how their domestic political situation impacts their food import situation as we go forward.
The other big food consuming countries, India will start their wheat harvest here in the next month or so, and India tends to be a bit of a swing country. Some years they can be an exporter, some years they're an importer. They run that pretty close. So we'll be watching fairly closely to see what India's production is when it comes off, to see what side of the ledger they're sitting on.
Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby. Take care.
That was the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, did we set any records when we look at this past week when it comes to weather?
Yeah, we had some impressive warmth that took place, especially on Sunday and Monday. Got into some southwest flow and we've had drier air move in, and we had abundant sunshine, and then we got rid of that snowpack too. And even the soils have started to dry out. And so all those kind of combined to allow for optimal solar heating and warm air, what we call advection or movement of warm air from the southwestern United States, where they're also really dry and warm. That resulted in impressive temperatures. We got up to, the warmest day was Monday when we got up to upper 70s for the entire state. In some places, central Kansas, looking down at Barber County over to Meade County and northward from there were even low 80s on Monday. Low 80s. It's February. Despite that, there was a warm day. I want to say it was 1999 that happened to occur on the same day that resulted in really warm temperatures on February 9th, 1999. And that made breaking high temperatures that day a little challenging. And so some places still did, but overall, it's the warmest we've been year to date so far by a long shot, and also really the earliest for some locations that they've actually seen that warm of a temperature in the year. So definitely a flip from where we were at the end of January, and that's kind of how the winter has gone so far. We've been really warm, really cold, and now we're back to really warm again as we start off February.
And as we've dried back out, are we going to see the change to getting some moisture?
Yeah, so the drought monitor this week did result in some drought expansion in northern part of the state and southern part of the state on the borders. Kansas still remains to be the island, but its drought is expanding across the region, just slowly encroaching on Kansas. So we have a storm system this weekend that's going to bring a pretty good shot at moisture, especially for those in south central, southeast Kansas. We might get over an inch of rain in those places. Southeast Kansas really needs that moisture pretty badly. You look at longer term deficits, they're running 6, 7, even 8 inches below normal for the last 6 months. So they need some moisture to help recover in the soil profile. But as far north as that precipitation is going to get, it's probably about the I-70 corridor, maybe a little bit further north and east and central Kansas. And I think kind of 183 is going to be the farthest west a lot of that moisture gets. And we're talking just enough to be measurable in those outer fringes. And then I think Northwest is going to miss out on yet another event. They're 80 days now without a tenth of an inch of moisture. They need it too, and unfortunately are going to miss out. And that kind of sets the stage for an active week next week. Despite that moisture, we're going to dry out really quickly, and we're going to get a big surge of warm air coming back in here early next week, and we're going to see winds pick up too. And there's going to be several days next week that are going to be very conducive for wildfire spread with gusty southwest winds, near record temperatures, and really dry conditions. So we just got to be aware that even though we get this rain, it's great. It's going to hold some moisture in these timber areas and some of the heavier fuel loading, the matted down grasses. But overall, all that grass is only going to take about an hour to dry out into early next week. And we're right back at it with fire weather concerns as you go into the end of February.
Anything else notable when you look into the forecast, Chip?
Yeah, the big question I keep getting is, well, we're warmer than normal now. Is Mother Nature going to hit us hard with another cold snap before the end of the winter? And I just don't think we're quite set up for that right now. We've got a jet stream that's pretty west to east. Basically, it's not dipping northward up into the Arctic and not dipping southward into the tropics. And so our temperatures are going to be pretty consistent. Yeah, we're going to cool off a little bit late next week. Temperatures maybe more towards normal. We should be around 40 with lows around 20. That's on average across the state. But I think we're going to be 5-10 degrees warmer than that for the most part beyond late next week. And I don't really see any signs of significant cold. If we want to talk about snow, we can't get snow in here without cold temperatures. And so moisture chances also look like they're going to kind of go by the wayside, and we're going to be fairly dry to finish out the month and likely go into early March.
Chip, I appreciate you taking the time to join us today.
Yep. Thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.